Um, we might make a start. My clock says it's 12:01 on the dot. So, good afternoon and welcome to the Rural Financial Counselling Service Southern Queensland Rural COVID-19 Support webinar. My name is Nathan Wichlacz and I'm a Rural Financial Counsellor based in Roma. Can you hear me, Sharon? Is the audio okay?
Yes, everything sounds great.
Excellent. Okay. So if you're not familiar with the Rural Financial Counselling Service, we're a government-funded financial counselling service designed to provide assistance to farmers and associated small businesses. The Rural Financial Counselling Service is funded by the federal and state governments, and we are a free, impartial, confidential and mobile service. Before I continue, I would just like to mention that much of the content and government support packages to assist businesses during the COVID-19 pandemic are new and may be subject to further legislative change. We cannot guarantee the accuracy and completeness of the content contained in the webinar, and as such, further advice should be obtained before taking action on any of the issues dealt with in this presentation. Now that the disclaimer's out of the way, the aim of the webinar is to provide an update on some of the new assistance available for rural producers during the COVID-19 pandemic. And as such, we encourage you to ask any questions you may have during this webinar using the chat box that can be enabled at the bottom of the screen. We'll be monitoring and I'll be attempting to answer any of your questions as we go. So please, we'd like to keep it as engaging as possible. At present, I believe that everyone is muted. However, you may be able to unmute yourself and ask a question if you find that more convenient or need to go into further detail. So without any further ado, let's kick it off by looking at the newly announced JobKeeper payment. The JobKeeper payments are payments from the Australian Taxation Office that are paid at a rate of $1,500 per eligible employee, and they're paid from the 30th of March 2020. To be eligible, you must have carried on a business on the 1st of March 2020. You must have employed at least one eligible employee on the 1st of March 2020, and your eligible employees must be employed by your business for the fortnights that you claim for. The business must also have faced a 30% fall in turnover. So this is the basic turnover test associated with the JobKeeper payment. There are alternative tests that can be met other than the basic 30% fall in turnover test. These may be relevant for some primary producers. So some of the tests that may be relevant is if you have commenced, acquired or disposed of part of the business, or restructured the business after the relevant comparison period. The main one in the list that's highlighted in bold there that will probably be relevant for a lot of producers is when an entity has been affected by drought or other declared natural disaster, being bushfires as well, during the relevant comparison period. So if an entity has been affected by drought or other natural disaster, the business should use the GST turnover in the same period for the year before the natural disaster was declared instead of the 2019 financial year. There are also those of you that might operate a business but don't have employees. In certain circumstances, an entity may nominate one eligible business participant to claim the JobKeeper payment. To be eligible, they have to be individual not employed by the entity. They also have to be actively engaged in the business carried on by the entity. And they have to be one of the following, being a sole trader, a partner in a partnership, an adult beneficiary of a trust, or a shareholder or director in a company. They must be at least 16 years of age or 18 years if a beneficiary of a trust, and they must not be employed by another entity and must provide you with a JobKeeper nomination notice. In essence, this means that for a mum and dad farming partnership, they can nominate one person to be the eligible business participant and claim the JobKeeper payment if all other criteria is also met. It is anticipated that the JobKeeper payments will be heavily audited, and so it would probably be best to make sure that all relevant paperwork and calculations are in order, and to keep this information in the event that you have to undertake the audit process. Again, this is relatively new legislation, and there may be amendments and further clarification on eligibility as the scheme progresses. If you would like to apply, you can log on to the business portal using your MyGov ID and lodge a claim for the JobKeeper payment. Alternatively, you can contact your registered tax agent, who's normally your accountant, and they can enrol for your business. And further information can be found on the ATO website. I guess, is there any questions in relation to the JobKeeper payment at this time before we move on?
Nothing in chat.
Okay. If you've got any questions, by all means, just type them in, and I'll certainly try and answer those for you. So let's just continue with some of the other assistance that's been announced by the ATO in response to the COVID-19 pandemic, which is the cash flow boost. The cash flow boost is available to employers with a business turnover of less than 50 million and that have employed staff between the 1st of January 2020 and the 30th of June. So the payment your business will receive is an automatic credit equal to your PAYG withholding amount, and this is capped at $50,000. The payment should be automatically credited to your account with the ATO when you lodge your activity statements. And if you are an eligible employer, the minimum cash flow boost that you will receive is $10,000 and will be received on lodgement of those activity statements. Further support from the ATO includes the instant asset write-off. This applies to assets that were purchased and installed between the 12th of March until the 30th of June 2020. This may offer some tax savings through the immediate write-off of assets that cost less than $150,000, so that's up from the $30,000 previous limit. Eligibility has also been expanded to cover businesses with an aggregated turnover of less than 500 million. The instant asset write-off is available for new and second-hand assets. However, some exclusions apply, and those exclusions are generally in relation to motor vehicle purchases. Further information can be found on the ATO website, or you can contact your tax agent to discuss how the instant asset write-off may be beneficial in your business. The government has also made changes to allow individuals early access to your superannuation. Until the 30th of June 2020, you can access up to $10,000 from your nominated superannuation account for this financial year. And again, you'll be available to access $10,000 from the 1st of July 2020 to the 24th of September. The information on the ATO website at present indicates that you will not need to pay tax on the amounts released. and you will not need to include those amounts on your tax return. To be eligible for superannuation, one of the following circumstances must apply. So you either must be unemployed, or you must be eligible to receive one of the following payments. Of that list, farm household allowance being the most relevant for primary producers. Or on or after the 1st of January 2020, you're made redundant, your work hours were reduced by 20% or more, or you were a sole trader and your business was suspended, or there was a reduction in turnover of 20% or more. So those are the current tests for the early release of superannuation funds.
Question.
Yep.
Is that popular? Is the superannuation withdrawal a popular request for people?
For myself presently, I've found that many of the older primary producers, a lot don't have superannuation funds, and so are not able to access that. Those that do have superannuation funds and meet the criteria certainly can look at withdrawing funds from those accounts. But no, I haven't found that a very popular thing for primary producers at this present time, but certainly other individuals should, it is a possibility and they can consider that.
Thank you.
So next we'll move on to the farm household allowance payments. So these are income support payments for farmers that are provided through Centrelink or Services Australia, formerly known as the Department of Human Services. These payments have been in place for a number of years, but have undergone some recent changes from an FHA review and also more recently in relation to the COVID-19 pandemic. Some of the changes that have been made from the 16th of December in relation to the review is the the off-farm income offset has been raised to 100,000, and losses can now be used to offset profits from directly related businesses and income from other sources. There is also lump sum payments for those who come off FHA due to exhausting their 4 years of entitlement on and before the 30th of June 2020. These are paid at a rate of $7,500 for a single and $6,500 for a member of a couple. The FHA has also been extended for a period of payment of up to 4 years in every 10. So previously it's been 4 years in a person's lifetime. So this is to take into account that there can be effects on a person's income over a longer period of time. So it's now been changed to 4 years in every 10 that you can receive the farm household allowance payment. Further changes coming into effect for the farm household allowance payment on the 11th of June is a simplified asset test. So at present, there's a farm and off-farm net asset test, and these two tests will be combined under a single net asset test threshold of 5.5 million. So farmers who have previously declined or who did not apply for the FHA payment due to failure to meet one of these tests should certainly review their eligibility after the 11th of June 2020 to see whether they can qualify. The payment rate is also changing from a sliding payment rate to a fixed payment rate. This will in effect mean that if you qualify to receive a payment, it will be paid to you at the maximum rate applicable. There's also some changes to the activity supplement. So the activity supplement is allotted funds that the farm household allowance recipient can access to obtain additional training or advice. Some of these examples of eligible activities may include accessing a professional for succession planning purposes, or paying for a grazing for profit course for upskilling. The activity supplement will also be increased from the 11th of June to $10,000 in a person's lifetime, and will also be extended to include travel and accommodation cost associated with the eligible activity. There'll also be some changes from the 1st of July 2020, including no reconciliation of estimates for business income against actual income. The estimates for your current business income will be used to calculate the payment. However, estimates should be updated and reviewed regularly, especially if your financial circumstances change in that period, to make sure that you still qualify for FHA. So there's also some changes to the FHA due to the COVID-19 pandemic, including the economic stimulus payment of $750 for anyone who receives FHA on any day from the 12th of March to the 13th of April. A second economic support payment will be paid from the 13th of July and will be received if you are getting an eligible payment or have an eligible concession card on the 10th of July. You will not get this payment, however, if you're getting the coronavirus supplement. So what is the coronavirus supplement? So from the 27th of April 2020, a coronavirus supplement payment of $550 per fortnight will be paid to FHA recipients. If you're already receiving the FHA, you won't have to do anything, as this payment will be automatically paid, and that payment will not be prorated. So you'll receive the full $550 if you're in receipt of the farm household allowance. Further information in relation to the farm household allowance, you can contact your local rural financial counsellor or the Centrelink Farmer Assistance Hotline on 13 23 16. And if you'd like to apply for the farm household allowance, applications can be made online using MyGov. I'd just also like to make mention of the JobKeeper payment, which was originally the New Start allowance, as there's been a few changes made to make it more accessible during the COVID-19 pandemic. The payment is extended to people who are self-employed and meet the income test. And at present, the government has waived the asset test and waiting periods. So the exemptions from the asset test mean that a range of farmers could test their eligibility for the job seeker payment. And those in particular, it could include farmers that have already exhausted their 4 years of the farm household allowance payment. That concludes an overview of the rural COVID-19 support. If you'd like to be kept up to date with any changes or new assistance available, you can like us on Facebook or follow us on Twitter. Thank you all for attending today's webinar, and if you've got any burning questions, by all means, ask them now, or you can certainly get in contact with us as well. How are we going there, Sharon? Have we got any questions?
Yeah, no questions there. So I've put up there our phone number and the email address in the chat, as well as what's on screen, so people can contact us. And we will send out a recording of this by email address to those who registered. It will be put on the website, on YouTube, and also on Facebook. So if anyone wants to refresh their memories afterwards. Okay, well, that might do then. Thank you very much, everyone.